Welcome to the Secrets of Wall Street, or as is known in Google, Los Secretos de Wall Street. And today I'll be talking about option trading. This has been a requested topic for my English speaking viewers. So I'll be doing this video just to make sure that I cover the basics of option trading. Option trading is something that is extremely complicated and something that would be deserving of probably like 2 hours itself. But probably just covering the basics will be good for you just to get an understanding and get you on your way to trading options. One disclaimer is that option trading is extremely risky and is something that I really recommend people take the time to actually learn what's it about, how it actually works, and from there, then actually start dipping with small amounts of money before you actually take your time and start working on your way up to doing bigger options if that is so what you desire. Typically, and the purpose of this channel, you'll see me do really, really small options. I have a really small account that I'm trying to build up. I could put lots of money in it, but I just want people to document the journey to know how I could go from small amounts of money to big amounts of money. And I want to make sure that it's actually possible. So my strategy is um, as soon as you gain some profits, lock in those profits, put it in stocks. Um, Options, like I said, is really risky, so I try not to hold them for too long. Once they have huge gains. So here basically is my account. This account I've only put in I think $1,000 in it so far, and overall for the most part it's up to almost 11K in profit. Very, very good performance. It's not something that everybody's gonna have the same luck. And as you can see, as quickly as it goes up, it can go down. So like at one point I was at a maximum of, you could see there, like this is probably like 50K at this point. I have taken profit, so that's why like this looks kind of weird. You see, like you'll see that it's like negative 39,000 dollars, but it's because I've taken profits. I've taken like around 11K of profits. So here we're gonna go, and I'll basically walk you through two examples of calls and put options, and we'll see what the potential are for each. And we'll also go through a few stocks that I think will be really good if you want to start zipping your hands in option trading. So one of my um, stocks that I had mentioned was CLF. This is a steel company, and steel, the logic behind it is that steel is in very high demand. There isn't enough supply for it. So that means that steel prices are going up. So these steel companies that are actually making them have to sell them more expensive. And in turn, they're making a lot more profit with little production, and that is a really big boost for the company. Obviously, like this is because of COVID. Once this goes away, then you'll start noticing that production will start ramping up and prices will normalize. So this is a short-term play, but it's a really good play for anybody that wants to get into this quote unquote hype. This is basically what I did. So when this first started, when I bought this, the average contract price was $16. You see it says 16 cents, but a good understanding about options is that options is you're buying the right to have 100 stocks at whatever strike price you want at expiration date. So that's why it's 16 times 100 is $16. I bought 15 contracts for a total of $240, and you'll see that there. Right now, these same contracts are worth 98 cents. So that's why 98 times 15 will give you that market value of 1,470. So a total gain of $1,230, which is a percentage gain of 500%. Now, here's my strategy as far as how do you lock in profits. When you have gains like these are very, very rare. Let me make that clear. These sort of gains, you will not see this gains on a daily basis. Probably if you're playing options, maybe like once or twice a week, you'll probably have 10 opportunities of these throughout the year. Um, so when you do have these kind of games, it's good to lock in as much of that profit as possible. So here's my recommendation, and this is basically what I do. So I pay $240. What you're gonna do is you're gonna sell enough options to cover your initial investment. So in this case, I'm gonna bring a calculator. I already did this calculation in my Spanish video, so but I'll do it here with you. Right now, each contract is worth $98. How is that calculated? Remember, $98 times 100 is $98. So we're taking 98 cents times 100. That's $98. And to cover my initial investment, it'll be three options. If I do three, that's 294 minus the 240. That means I'm making $54 profit. So I made basically the option free, quote unquote. You made the option free. You still have 12 options to let run if you desire. You could sell all 15 if you want right now. But if you say, "Hey, I think it's going to go up and I can make more money," then at least you're selling enough to cover your initial investment. And even if the stock does not go up further than this and you lose your money, you're not losing your initial investment. You made some profit, so you'll be safe. This is how you play smart, and this is how you play in a way that will be really, really, really good for you so you will not get burned. And this is something that a lot of people do not do, and it's not very smart. So try to do this whenever you do have these gains. Try to lock in profits so you do not lose your money. So I'm going to give you an option calculator. And here this is called options profit calculator. And we're going to do a long call. And here we have the symbol. So basically, this is going to give you an idea about how, um, if you want to see like what's your potential for growth. Here you have CLF. That's the stock symbol. Here you're going to get the price. Um, Buy or right, you for now, if you're just doing like what's called naked call options, which is like you're not putting anything backing that, you're just buying the right to the contract, it's called a buy. Um, and the one I had was for February 19th for $20. And there's that 98 cents we saw. And here you go. So CLF, $20. And that is worth 98 cents, which is what we saw. And here is the expiry date that I bought for 219. So I'm gonna just leave one so you see more or less how this works. Here's the calculation. I'm just gonna go back here and put this to $23, so you see what happens if it goes past the $20 that you have. And I paid. Well, I'll show you this first so you could actually see this. So let's say you bought this on Monday. Um, Here's your risk. Lots of risk, lots of downside if it goes down. Very little potential for growth. So right now it's very risky to buy. But if you get in early before a run up, then you're very, very likely to be making money. So timing is very important. Do not buy options when a stock has run up a lot because you will get burned. So, and this is basically the visualization of that. Right now, anything you buy, you're losing lots of money if it stays the same or if it goes down. But here, now I'm going to show you. Here's the difference. I bought this at 16 cents. So that changes everything. I paid I paid 16 cents. So if you go down here, see how this changes? Your risk is a lot less because you already bought it so cheap. So your risk comes if you hold till February. That's where your risk starts. So you have time to play around and still be in what's called in like making profits with this option if you decide to hold it. Um, Here's the potential. Right now it's worth $98. Let's say it does get to $20. Let's say maybe January 21st, which is pretty realistic. So that option is going to be worth, instead of $98, it'll be worth $143. A lot better um, potential. And let's say at this point, let's say you sold your three, and instead of 15, you have 12. And you're still making $1,000, like $1,644. You're still making a lot of money with those 12 options that you still have. So definitely the potential is there if the stock goes in the money, and if it shoots up way higher than that, look at this potential. Like the potentials are huge. Obviously, I doubt it's gonna get to this amount. It's already had a huge run up. But the potential for this to happen is possible. And what I really recommend people to do is take profits along the way. If you do buy multiple, sometimes you'll buy one, just buy it, and if you want to keep the play, just buy another option. That's further higher strike price. So let's say, for example, now that you have made profits and you still want to be in the play, you only made one. You could do what's called rolling over an option. So let's say, for example, you had one at 261 at this point. This is a $17 strike. You made $261. You're gonna sell that one, and you're gonna buy another one that's further out the strike price, and with the expectation that's gonna keep going up. So let's say you want to buy this one at $21. So you're gonna buy 109. So you're still in the play, still the potential to grow. You're going out from in the money to out the money again. So that's why it's less expensive. But you still have the opportunity for growth, and you locked in your initial investment. That's another way of making profits. So you're basically keeping $160 for yourself, and you still have the potential to make more money. So this is how you play it safe. This is how you make sure that you're keeping your money and you're not putting yourself at risk. So this is the same thing for puts. Puts is exactly the same thing. Let's say, for example, you saw a stock that shot up a lot. Puts are exactly the same way. Let's say, for example, you say that you saw a stock that shot up a lot. And you say, hey, I think it's going to go down because this rally came with no real news. So you're going to put your money where your mouth is and you're going to buy puts. So when you go here, instead of buying a call, you're going to buy a put, and you put this down, and the further away it is from the price, the cheaper it is. So let's say you think it's going to go to $14. So you're going to pay $56, and um, as a as a stock, if it does go down, for every dollar it goes down, you're going to be making 16 cents per every dollar that it goes down. This is basically what's called the Greeks. So just a little explanation there. Delta is the change in the price of the option for every dollar it goes down. So if you have, right now it's at $18, let's say it goes down to 17.14. So instead of the option costing now 56 cents, it's gonna cost 72 cents. So that's how you make money that way. Theta, which is also very important, is time. And for every day that passes, this is gonna decay, or the option is gonna be reduced in price by 1 cent. So 1 cent. Very little time decay at the beginning, but the closer you are to expiration, that theta is gonna go up really, really high. And I'll show you what I mean. So you have January 15th, which in this case it expires next week. And that very same $14 strike price, well, I can't do that because this is out of the money really far. But so here we have, I'm gonna give you this one, and this theta here, it's 4 cents for every single day that it goes that passes. So the time decay is very, very, very high. So that's that. And basically, if you're going to be trying to play in options, try to keep it as safe as possible. Um, it's very, very important that you have a plan. But if you really want to be making money, this is probably the best way to do it. Very like with everything, if you have huge potentials, there's also going to be huge risks. But like I said, if you know how to play it safe, if you do make gains, if you know how to protect those gains, then you'll be good. Another thing that I really recommend is that you try to um, at least try to put whatever gains you have in stocks, and that way, like you're actually having equity. Your equity is very important. So you're not just keeping it in cash; you're actually putting into stocks that you know have long term potential. You're putting in stocks that have long term potential for growth. And this is basically how you protect your capital. This is how you make sure that you're actually making money long term and protecting yourself from the future. So, any questions that you have, feel free to ask. I know I had a few people ask me this. Believe me, I can't promise this is going to be typical. Videos take a long time. Um, Usually, these type of videos is just me myself editing. Podcasts is between me and Harry, so two-man team at this point. So maybe with time, once we get more viewers, if we get a big following, then definitely there'll be more frequent videos. I'll probably hire an editor for that. But um, right now, just let me know whatever topics you think are really important to cover, and I'll try to cover them in a video when I can. So, with that, that's the video. Remember to like, subscribe. Remember to leave a thumbs up. It really helps the channel out. And again, any suggestions you may have, feel free to ask in the comment section. So, thank you.